always come, So now there's a question 4, which is stock valuation, sometimes inventory valuation. This was for 35 marks in a 30 minutes. So 4.1, choose the correct word from the given in bracket. Write only the word next to the question. So you write 4.1.1, write the word, choose the correct one. So let's start with 4.1. They are saying this: the method assumes that the closing stock is valued at most recently in batches. What will you choose?
It's FIFO.
This is FIFO, which is first in, first out.
Oh, yeah.
Then we go to the second one. Have your mark. Go to the second one. 4.1.2, the system requires a year-end stock count to be able to calculate cost of sales. Which one is this?
It's periodic.
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 Remember, periodic says the value of closing stock is calculated at the end of the counting period. So this keyword here articulates a lot. So this is periodic. So you get your mark. Then we go to 4.1.3. The method is suitable for similar goods that are bought in bulk. What is this one? Remember, we chose FIFO right on top. So meaning automatically it will be what? Weighted average. So weighted average is for suitable is suitable for similar goods that are bought in bulk. Ne? So now we go to the last one, which says the system requires that all products are scanned at the point of sale. Remember we chose periodic this side. Automatically it will be perpetual, because perpetual inventory system says the cost of sales is calculated at every point of sale. Do you see that point of sale?
Yes.
Thank you. So you get your 4 marks there. You should get your 4/4. So now we go where? To 4.2. 4.2, they are saying that when Botic, the information relates to the ALU's BEX for the financial year ended 28 February 2021. The business uses, remember I told you guys we have 3 inventory methods, which is FIFO inventory, FIFO, which is first in, first out, and we have weighted average method and specific identification method. So we use one of the inventory methods to calculate the value of closing stock, which simply means that the business uses one of the 3. So they will tell you it's very important to read the instruction, right? Read the instruction. Very important. So this is what is going to happen. They said it's FIFO, right, that they are using, and the periodic inventory system is in use. When they are saying the periodic, when you see the statement, just know that they will need you to calculate cost of sales. And when you're calculating cost of sales, you will use that formula that I gave you guys for obvious if Alisa can run a company, right? So, but sometimes it's possible they might tell you the business uses perpetual inventory system. That's when you are going to calculate your cost of sales using sales multiply by what? Multiply by markup, divide by 100 plus markup, or but now when you see periodic, just know you use that formula. So now they want us to calculate our 4.2.1 to calculate the value of closing stock at the end, you see, of the year, which is value of closing stock. We are going to comply with the FIFO, right, formula. So remember, this is the information that we have here. So that we are going to use. Remember I said we have what? We have bottom month purchases from that formula, BMP. And we have what? We have this. This is what we are going to focus on. And this one. And what? And this one. Do you see it?
Yeah.
So always, this is very much important. then we should consider the returns. And there is a principle when you are taking into account your returns. When the returns are for the same date, because we use bottom-up principle to calculate FIFO. So if the returns are for 15 February 2021, we minus them. So this, we have 3 steps that we use when you are minusing the returns. The first one, number 1, it's same date. If they have same date with the returns, you minus. Number 2, if no date, you minus, because these returns, we are going to assume that they are for that last month there. Ne? Then if maybe they say the other one, you should go and check it in your notes there. I wrote it. So now, this is the formula that I gave you, right? Bottom month purchases. This is our bottom month purchases. I highlighted everything for you there. So let me change the color, right? Which is 320. We are following this formula here. We are going to open our bracket. This will be 4 point what? Let me do this. This will be 4.1.1, right? 4.2.1. Yeah.
Yes.
4.2.1. So you open your bracket, you write 320. Then we have the returns, because the formula says minus returns, bottom month purchases minus returns. The returns, we don't just minus, we minus when the date are the same and no date is given. Because if you check, they just gave us returns, there's no date, so we minus, minus 20, close bracket, multiply by bottom month unit price. Our bottom month unit price is this one, 170. I'm going to say 170 plus C for carriage per unit. You see they gave it to us, which is 15. We are going to add that 15, right? Then remember the difference between these two, we call it net purchases, right? Bottom month purchase minus return, we get net purchases of 300. So now we go to the other part. It's closing stock units. This is our closing stock units, 380. 380 minus what? Minus our net purchase of 300. Multiply by what? Subsequent unit price. The subsequent unit price is this one, the one that comes after bottom month unit price, which is 160, plus the carriage per unit of 13. So it is not always that they give you that unit, that carriage price per unit. So you just leave it like that. Don't force in accounting if you don't have. So now we are going to take this and put it in a calculator, right? And see how much are we going to get there. So we are going to say 320, or just say 300 multiply by 170 plus 15, it's 185, right?
Let me check 170 plus.
Yeah, it's 185.
It's 185.
So multiply by 185, we get 55,500.
Yeah.
55,500. We go to the second one, which the difference here is 8. We say 80 multiply by 173. The one we get 13,840. 13,840. So 173, it's 160 plus 13. It's 173. So now you add the two, it gives you value of closing stock, right? Plus
Yeah.
85,500, 69,340. Voila. This is how you do it. You don't have to
Yeah.
sweat. So now you move. Let's hear what are they saying now. We got our 5. Got our 5. So now we move. We go to cost of sales. So remember cost of sales, I said we use obvious palisa and run a company, right?
Yeah.
So under obvious, it's 4.2.1, 4.2.2, okay? So 4.2.2. So obvious palisa, so it will be like obviously, obviously palisa can run company. So obviously, so this is plus, this is plus, this is minus. So this O is for opening, this obvious is for opening, this palisa is for purchases, this can is for carriage on purchases, this returns, it's this run is for returns, companies for closing, right?
Yeah.
So you must always know this is the formula, right? Let's write it in an accurate manner. Opening, opening, then plus purchases, plus carriage on purchases, minus returns. Then minus closing. So when we are doing this counting rule, you need to know that we are going to comply with the amounts, meaning that we are using the amounts, right?
Yeah.
So amounts. So the closing stock, remember we calculated it here. So this is the one that you will use here. So if you get it wrong, you will get a chocolate mark there, a principal mark. So now let's do this. Let's go and take our opening and check what is our opening there. What is our opening? This is our opening, right? Can you
Yeah.
see our opening?
Yeah.
68,120, right?
Yeah.
68,120. Be 68,120. Our purchases, then we say plus purchases. Purchase what? The purchases. So now you know what we are going to do. It's very simple. Ne?
Yeah.
Remember, they gave us total purchases, which is this one, and they gave us total cost, including what? Carriage. So this total here is for purchases, and it also includes what? Carriage. You get me?
Yeah.
So now there is no need for us to, because that amount include what? Includes purchases and carriage. You understand what I'm saying there?
Yeah.
So it's 272,450. 272,450. So this one consists of what? Carriage and purchases, right? You can still do,
So
you
so we
can
must use the total amount then. Like
say,
we must use the total amount, like
yes, I carry
the
this,
purchase.
yes, this
So we
one.
shouldn't only use the
No,
purchases for the bottom
no.
month. Oh,
Remember, we are not doing FIFO.
oh, yeah,
We are calculating cost of sales. So if you wanted to separate, you were just gonna take this, right? You're just gonna take you add everything here, you get your total. Then since you have the total of what? Of the units, the side, then you get the total of this here, which was going to be 30. 30. Let's try something. Let's try something. I want to see something there. I just try something. Let's try something. So we know now this is 30, right? The total there. So let's say 30 multiplied by 1570. We get 47,100. 47,100. This is carriage on purchases. Ne?
yeah,
So let's add the total purchases there and see. 77,500 plus 120,000 plus 54,400. We get this. We get 251,900. 251,900. So when we add the two, this is for purchases, right? So I want to show you where did they got this amount here, right? So let's add the two. Let's add the two, that purchases and what? And carriage on purchases. Then you say plus 47,100. It gives us this, which we might have done something wrong there, but we will rectify it and see what is what. Ne?
yeah.
So, but the one that we just did, it's accurate. This one. Let's take this one. I don't know. Maybe I missed something out there. Maybe I missed something. 15 plus this state, right? 57. Oh, 1570 times 8, 700. Okay, it's fine. Okay. Okay. Remember we got what? We got, what was the answer that time? Okay, let me say this. 450 plus 37. Okay. So now we go what? We minus the returns again,
Yeah,
which is what our returns are what? 3,700 again.
yeah.
3,700. Then minus what? Closing. And we
So,
got that closing, which is what? This amount here, 69,340. Then we get our answer. The answer there, it will be our cost of sales, right?
yeah,
So let's say 68,120 plus 272,450 minus 3,700 minus 69,340. This is the cost of sales, 267,530, 267,530. I don't know from your previous activity, did you got it correct now?
No, I use the bottom one spreadsheet too.
No, don't do that. So now we move, go to the next question there. So let's hear what are they saying. They did we should do. So there's no other question. Let's create our own questions there. So this is cost of sales. So let's create our own question. Let's get the gross profit, right?
Mm-hmm.
So you know the gross profit the same way you calculate from account income statement, sales minus cost of
See.
sales. You have the cost of sales. Am I lying?
No.
This is the one.
Yeah. Yeah.
530. Then minus what? You will minus the sales. Let's go and check. They gave it to us. Adjustment C. Let me check your adjustment C there. There is a total sales amounted to this. You see?
Mm-hmm.
393,750. Is it 3,093,750, right?
No, it's not. It's not 3 million.
How
It's
many
300.
zeros? Oh, it's 1 0. It's 393,750 and 750, right?
Yeah.
So let's write it there. Our 393,750. Then the difference there gives us what? Gives us the gross profit.
Yeah. Gives us 126,220.
Minus 939,3750. We get this right?
Yeah.
126,220.
Yeah.
126,220. This is the gross profit.
Yeah.
So let's create another question. Let's get what? Let's get the markup percentage. Markup percentage. So markup percentage, the formula is what? Cost of sales. No, gross profit. Gross profit, right? Gross profit over cost of sales. Multiply by 100. So the answer must be in percentage. So I advise you when you are practicing, remember I taught you the examinable questions for inventory valuation. Just treat them, just create your own questions there, even if they didn't ask it there. So the gross profit, remember we have it here. You see it?
Yeah.
We are going to say 126. So as you can see, accounting is a follow-up subject. Our cost of sales is there. So you must always make sure that the value of closing stock is correct. You hear me?
Yeah.
530 multiply by what? By 100 over 1. What are you going to get there?
Still calculating. 100. It's 4,7. I mean, it's 47,17.
47.
17.
So 47,17, it will be 47%, right? So let's create another question for missing stock. Do you see this topic is very easy?
Yeah.
And it's the interesting one. I don't want to lie. So missing stock, we are going to use obvious Palisa run small company. Again,
Mm-hmm.
obvious Palisa run small company. So this simply means that this will be our opening plus purchases minus returns minus sales or sold. They didn't give you one, minus closing. Then you are going to use units. You hear me?
Yeah. Yeah.
Do you understand? Awang tola na.
Yeah.
So we want to find out how many stock did you stole when at Simolo over there. Let's go and check our opening. Let's go and check our opening. This is the opening, right? Yeah. Let me change the
Yeah.
color. So since we are using the units, this is our opening, right?
Yeah.
420. This is our closing 38. 420 and 38, right? The opening is what there? It's 420, right? Is it 420, right? And
The opening, yeah, it's 420.
and the closing is 38.
It's 38.
So since it's a minus, so let's go and check the purchases and the returns. The purchases, the returns are what, 20, right?
Yeah.
And the total purchases is this one, right? 1570, 1570 plus 1570 of purchases minus 20 of returns. Then let's go and check our sales. Always check where the bold, where it is written in bold, sales. So they said that total sales amounted to, and at this 590 bags. So this is what we are going to consider. Remember, we need the units.
Yeah.
590, right?
Yeah.
590 minus 500 and, is it 590 or 5,000 something?
Oh.
The sales is 1,590, yes.
Yeah. Yeah.
So manje sizenza kanjani la? Sifake calculator sibone ukuthi sizothi 420 plus 1570 minus 20 minus 1590 minus 380, we get 0. So this means that no stock have been stolen, right?
Yeah.
Meaning that the internal controls that have been applied there, it's very strong. What might it be? Maybe division of duties,
Yeah.
put physical security at the point of exit, install barcodes on stock.
Yeah.
It's a lot, right?
Yeah.
So if it's possible that we found that maybe let's assume that 5 units are missing or 5 items, then they could say give or provide solutions to prevent this to happen in the future, or its internal controls. Those are the division of duties, right? The employees put physical security at the point of exit, install barcodes on the items, install cameras and CCTVs, It's a lot. I gave it to you guys. So now we are done with
So
this one. Okay, I'm listening.
there was a question here in question 2.
Yeah, we are still going
Uh,
there. We are not done.
oh,
So let's calculate closing stock holding period. Ne?
yeah,
So let's say they want closing stock holding period. Remember, I told you this question can be asked in two ways, right? Remember, they can ask it as calculate number one, average stock holding period. Second, they can say calculate closing stock holding period. How long it takes, how long it takes stock, you see the holding period. How long do we stay with this stock in the business? For example, you have 30 buckets of Archer. Then your target, maybe you are targeting that within 30 days, you must be sold all of it. You see?
yeah,
So you must be careful. If the question say calculate stock holding, closing stock holding period, there's a formula that you use. You remember, if they say average, you use for average. So should I do it with you, or you are fine since we did it? Or let me just do it, because hey, you guys, I don't trust you guys. Yo, you guys, you are full of drama. Nina,
uh,
hey, you stress me. So
yeah,
remember, Prof D said, I encourage you to use the units formula. Remember, again. So
mm-hmm.
let's start with number one. Let's calculate average stock holding period. Ne? So the formula that I said, average means half 1/2 opening plus closing stock units divide by what? Divide by sales units. It can be sold right. It is like this. Multiply by 365. So we are calculating in days, ne?
Yeah,
In days. So we are going to say 365 days. If they said in months, you are going to say 12 months. But now in days. So I said I want you to use what in this formula? Units. Again,
yeah,
you will never go wrong, because if you don't use units, maybe your closing stock, you didn't calculate it well. So let's take our opening. Remember, we used our opening when we were calculating missing stock, which is this one, right? And our closing is this one, right?
mm-hmm.
420 and 380. So we are going to say 1/2, pen brackets 420 plus 380, right? This gives us 800 for sure. So divide by what? Sales or sold units. Let's go and check how much is our sales or sold units. How much is it? It's this one, right?
Yeah,
1590. Don't have to sweat. 1590 multiply by 365 days. So put it in a calculator. So put it in a calculator there. Let's
yeah,
say
it's
divide by 2.
91.8.
15 times 365. It's what?
91.8.
91.8. So we can round it up to 292, ne?
Yeah.
92 days. 92 days. This is not good at all. You are selling Archer. So, and you were targeting to dispose, to sell it within a month. Remember, Archer is something that can expire and can be damaged. The disadvantage of keeping too much stock in the business, you are keeping too much Archer there. Tied up capital, right?
Yeah.
You'll run a loss because your stock will expire and be out of fashionable. So you lose customers. You won't meet your targeted profit. So they can even tell you that last month it was 45. Then they say comment on the stock holding period. Remember, I taught you how to interpret. Just say average stock holding period increased from 92 days to 45 days by this. Then you said you write tied up capital down. You get your full marks. So now let's calculate it in what? Closing stock holding period. So the formula is the same, which it will be what? Closing stock. It will be closing stock units, right? Closing stock. We use units. This is the formula that I prefer for you guys. Sales or sold units. If they ask you to prepare this in days, you just multiply by 12 there. Then multiply by 365 days. Then, you know, your closing is what? Is 38. Am I lying?
So?
Your closing stock
the closing is 38, yes.
is 38. Where did we get 38, my accounting gurus? Let's go there. Remember the time we were calculating missing stock? This is closing, right? Which is 38. We can still go to the information there. The 38 I'm referring to is this one. This is the beginning or opening, closing, beginning, end of the year. So now, this is where we got 38. So for how long it takes us to sell the stock? It took us 92 days, which is bad. If you go and read those internal controls and analysis of inventory valuation that I gave you guys, everything is there. So divide by what? By sales, which is this one, 1590. Multiply by 365 days. Your answer, you must write days. We get what?
Yes, it's
380 divided by 1590 times 365 days. We get 87.2, which will just say 87 days. All right? Honky dokie. That's why I always say accounting has enough marks for everyone to pass, guys. You need to aim for the moon. If you don't reach the moon, you'll fall higher and be Maxwell accounting good. You don't have to panic when I'm here. You just have to comply and follow the procedure as I tell you to do. So now, look, we calculated the average. You see the question that I was referring to? Calculate average stock holding period in days. Do you see that question? 5 marks. We already did it. And we got what? We got 92 days, right?
Yeah.
It's this one here. It's this one. Got 92 days. So if it is like this, what are we going to do now? This is 92 days that we got. got 92 days. It took us 92 days to sell whatever that we were selling there. So now, these are the internal controls. Explain whether Gwen should be satisfied with this figure or not. State or not. State 2 points. Then they told you 52 days. The average stock holding of last day, it was 52 days. Now, remember, I told you that's where you interpret. First thing, you should not be satisfied. Will you be satisfied when? Because you can't make profit. When you buy something, you want to sell it faster, right? Something like Archer doesn't need, because it's sunny outside there. It won't last. It will expire. Then when it expires, what will happen? Lose money. So when should be satisfied?
No.
Wonderful. You should not be satisfied. You should not be satisfied at all. Let's answer on this one. We got 92, or you can just even say, yeah, we got 92 days, right? Then last year it was 52 days. The first thing that you do, you have to interpret. Remember, what you can do is that they asked you, explain whether you should be satisfied. The first thing you do is that, which it's 4.2.2, right? 4.2.
Yeah.
4.2.2. The first thing you write there, should not be satisfied. Not satisfied, right? Satisfied. It's an answer. It's a mark. It's a mark. Then you state the reason there. Stock holding period, right? Stock holding period. Please do not abbreviate. Increased from 52. You must write in full. Don't abbreviate as I did. 52 days to 92 days. By what? What is the difference there? 50, 60, 70, 80, 90, by 40, a year. 40 days. Then, after doing this, you are going to say, since you said he won't be satisfied, there will be a cash tied up in stock again.
Yeah.
Tied up of cash. Simple. Since he's selling bags, remember he's selling what? They told us bags, right? These bags can be out of fashionable. It's another answer, right? Outdated or out of fashionable. You can just say outdated and you will run a loss. This is how it is. Then we go. So we got what? Our 4 marks. Go to the 12 marks. This one is problem solving, so I'm not gonna write it. Since they are saying when boutique also sells jackets and jerseys, Gwen has provided the information and requested advice. Identify 2 problems. They need 2 problems in each product. 2 for jacket, 2 for jersey. For 2021, in each case, give 1 piece of advice, right? Do you hear it? Piece of advice. to address the problem. So what you're gonna do here, let me just do it. Yeah, it's 4.3, right? 4.3, 4.3, 4.3, 4.3, 4.3. Is it 3 or 3? 3, 3.
Three.
So let's say this part is for problems. This one is for advice. Kind of solution, right? What would you advise me? So this were for 2021. They are saying you should check for 2021. So this is what is going to happen. So they need two problems, right? So we have what? We have jacket, right? So it will be like this. We have this here. We have jackets here.
Yeah.
We have jersey. So now we need to provide the issues there. Problem. So problem number one. Let's go and check. They gave us the table, the information there that we should check on. So they said we should refer where? They said refer to information D. So I think our information D is this one, right? So look, remember what I always tell you guys. I love this question, this part here. I'll create a question to ask you. The things that you should check is this one. We are starting with jackets. Let's check. There's no returns. It's not a problem. It's good. Stock turnover rate. I can say it's also fine. Is it bad or good? Tell me.
Hey, that's what I don't know. I was about to ask you that. Like, how do you see that it's not good or bad?
Go and read those notes that I gave to you. We have purchases. We have units sold. Right. Let's check the purchase. So it's very simple. If you check, we are on jackets, right?
Yeah.
Our closing stock is this one. Yeah. And we have our opening stock. This tells you there's too much stock on hand. Do you get what I'm saying? So this was the beginning. This is the end. So this simply tells you that stock holding period. The stock on hand there. So if you go to the study guide from those notes I gave you, I even did this problems, solutions, and advice. So you are going to say stock on hand, right? You are going to say stock on hand increased, because stock on hand is the stock that we'll have at the end of the year. Ne? Increased from what? From 407 units to 615 units by the difference gives us what? The 208. Yes, you have to confirm 208 units. This is what you will say. This is the first problem, right? Then the advice that we can say, offer discounts, right? Or increase advertisement, offer
Yeah.
discounts. So when you offer a discount, you are going to attract potential customers. When those potential customers are attracted, meaning that the increase in sale, there will be an increase in sale, the stock reduces. So let's go and check units sold there. Can still talk about it. You can still talk about markup, selling price, because this is what affects most of the time. Because if selling price is too much higher, they won't buy.
Yeah.
So you can still, I want you guys to calculate missing stock here. So remember, obvious Palesa run a small company. We have opening, right? Opening, we have purchases. Again,
Mm.
after purchases, we have what again?
It's open.
We have sold.
Okay.
Remember the formula says opening plus purchases minus return minus sold, right?
Yeah.
Minus closing. Let's calculate missing because it is also a problem. You must think when it comes to these things, guys. If you go and read those notes, I'm telling you, you will never face challenges when it comes to this. So let's say now we are on missing. Missing stock. Just write missing stock or missing items. So the formula, you know, it's opening, right?
Yeah.
Our opening there is 407. 407 plus purchases of 800 minus what? Minus sold again. We don't have return. You don't have to force. Minus what? Minus sold, which is 550. Because they said returns are 0. 550 minus closing of what? The closing of, what is the closing? Check there.
The closing is 615.
615. So when you put in a calculator, how much are you going to get there?
I get 42.
You get what?
42.
So this is 42 of missing stock, which was stolen. What causes missing? Missing 42 missing stock, ne?
Yeah.
So you must know that this, in the financial statement, it causes what we call trading stock deficit. A trading stock deficit is a loss which is caused by damages or stolen. So when we are calculating missing there, you are already know that this is what stolen. So the advice that you can give there is the one that I taught you.
Yeah.
You remember regular physical stock count, division
Yeah.
of duties. This is what you apply there. You see?
Yeah.
So let's just say division of duties. Division of duties of on employees. Or you can just talk about CCTVs. But you must be careful because sometimes they will tell you that don't use it, expect. They will say accept. Ne?
Mm.
So they need 2 for each. Let's go to another one. Another one. Another one. Another one. Then we'll be done for the day. So we are at Jersey. Let's go and observe the Jersey. The Jersey one, the Jersey one is this one, right? Let's check what is happening there. Let's check at Jersey. There's returned. You see, in if you check in 2020, the returns were 78. 2021 it's 90. It's bad. It's a problem. It's a problem. So you're going to say returns increased from what? 78 to 90. So just talk about returns increased. Ne?
Yeah.
From 78 to what? To 90 units. Remember, what causes returns?
Faulty in
Faulty
product.
of product and lack of quality. When you are not satisfied, you have the authority, you have the right to return that product.
Yeah.
So now, what the advice will you give there? Because if you see something like this, returns, meaning that as a business, you are the one who is selling those jerseys, right? For example, then if you are keeping getting returns, it tells us that your product, your jersey, have faulty, there's no quality there. What can you do? Change of supplier. You can write it there. Ne?
Yeah.
Or do not buy cheaper products, because when you buy cheaper, those things that are cheaper. I'm not trying to offend, but I'm just except from Pep Store. Ne? So we can just say a change of supplier, right? So that when you change that supplier, meaning that you will receive a good chase. This is the advice that I'm giving to you. Or improve, change suppliers, or go for quality products, right?
Yeah.
Go for quality products. Why I want to tell you, when it comes to problem solving, think out of the box. There's no right or wrong answers there. If you are just thinking outside the box, you'll get the correct marks. But I know you guys, you are lazy to think. Read those ones from my notes. So let's get the second one. What can we say about the second one? Let's go and observe there. Let's go and observe. We use the returns, right? We used it. We can still calculate missing. Still fine. So can still calculate missing.
Yeah. I calculated missing for this one. There's no stop missing for this one.
You can calculate cash. You can calculate the missing money. Remember, I once told you about missing money. The formula. You remember that formula?
And I wasn't present there.
Okay. The formula there for missing money. It's very simple, let's do this. I don't want to say it. Let's just do the workings, because I don't want people to see it. Ne?
Yeah.
Yes. So let's check something here. So it can be stolen money or missing money. So we have this. This is the cash deposited that we have. Right? Then we have something there. Where is it? Where is it? Where is it? Where is it? Let's do this. Calculate, say, this cost price per unit, right? Say 1,250 times I want to see something there. 100 over 2, let's say 270. I want to see something. What do you get?
I get 78.7.
78.7.
Yeah.
Multiply this to, oh, wait. That's the markup. I didn't notice it. Okay. We want our sales, right? 170 multiply by what? We want our sales. This is the markup, right? This is the markup. Multiply by 125 over 100. Hey, something I'm gonna lie here. Okay, did
It's 21250.
21250.
Mm.
Okay, it's fine. So look now, what I want you to do, multiply this two here.
Which one?
These two, can you multiply it together?
Oh, okay. Yeah.
There's a missing of cash. What causes missing of cash? Stolen, theft, right?
Yeah.
So this is the formula. Missing of money, right? The formula is total sales minus cash deposited. This is the cash deposited.
Yeah.
Cash deposited. So the cash deposited, we are given it, which is 349,500 minus our total sales. To get our total sales, it's very simple. We have our sales. You are going to take your sales, which is this here, which is this one. You take your sales and check if whether do you have returns there. Then you minus the returns, and we can see that we have the returns of 90, right? Minus those returns and see what are we going to get. 1970 minus 90, we get what?
90. We get 1880.
1880. Multiply it by the selling price here. We are going to get total sales.
Yeah, it's 399,500.
399,500. Now, this is our total sales. The difference, check the difference there. How much are we going to get? That difference, if it's zero, meaning that there's no money that was stolen, but the cash deposited and the total sales are not the same. So obviously
Yes.
there's a stolen money there. How much?
50,000.
50K. O fitile ka yone tshimolo.
Yeah.
We bole 50K. You are the one who stole. You are not reliable. So we say what? Missing of money.
Yes. Separation of duty.
Missing of money. Then you show the workings, right?
Oh.
You said
Yeah.
hit 399,500.
500. Yeah.
Then minus what? Minus this 349,500.
3450.
You get
Yeah.
what? 50,000.
Yeah.
This 50,000 is the one that was missing. You
Yes.
see? So
Yes.
now, what you can do, the answer there, it's simple. Encourage the use of EFT. Yeah?
Oh.
Yes.
Oh.
Promote or just say encourage. Ne?
Yeah.
Encourage the use of EFT. So electronic funds transfer, right?
Yeah.
You can still say division of duties. You are still fine. You see?
Yeah.
Or you can just say, think of online sales there. You know, when you obviously do online sales, they are going to pay using what? EFT.
Yeah.
Do you get it?
Mm.
You can just say division of duties. Then you get your 12 marks. So you see why I always tell you guys to go and read the notes that I'll be giving you. This is the reason you meet such type of questions there. So this is the end of the session.
Yeah.
From I to you, it's a good night.
Yeah. Sharp, sharp.
I hope you enjoyed the lesson and you will definitely do well and master everything there.
Yeah. Let
So
them in.
we got 35 over 35. Voila.
Yeah. Sharp, sharp.
Sharp. Guys, I always tell you, counting has enough marks for everyone to pass. Aim for the moon. If you don't reach the moon, you fall higher and be Excel accounting guru. Sharp, sharp.